The next statement then, the next statement, pardon me, the next and last topic is how do we create an income statement? And this is really pretty straightforward. We simply apply the BizMiner percentages to our estimated revenue, or our estimates of revenue that we developed in the last segment. Okay, so let's go see how we do that. It says we need to apply the BizMiner percentages. Well, what are we talking about there? So we want to take a look at this report we were considering last. That's the profit and loss profile, because sometimes income statements are called profit and loss statements, or P&Ls, and we're looking at startups. And last time, what we looked at when we considered this was this first chart that gave us dollar figures for what's happening, and over here on the left, these are our incomes and expenses, and so these are all the items that would be in an income statement. Well, what you've done is to generate some estimate of sales, which is like one of these three numbers here at the top. And that's really all you need to calculate, or not all you need to calculate, all you need to estimate. Because if you'll scroll down a little bit further, then you'll see exactly the same chart, annual average revenue, income and expenses, but this time instead of reporting dollar figures, it's reported as a percentage. So again, here we have these same income statement items here, and we have the statements for 2005, 2006, 2007, but this time instead of there being dollar figures all throughout here, what we have are percentages, and we start out with the revenue as 100%, and then it calculates how much is inventory, and inventory is 1.54% of revenue. So all of these are percentages of revenue. So this 42% figure here, which represents cost of sales, that's 42% of our revenue. In other words, for every dollar we make up here, it costs us 42 cents in sales to deliver that sale. And then all the rest of the way down through here, you see all these other percentages. These don't all add up because sometimes there's some breaks in these percentages. And when I show you an income statement on the Excel spreadsheet, those breaks will be more evident. Okay, so what I want to do now is take this and scoot it clear over here to the side a little bit. And I want to bring back up that spreadsheet. And we're going to go to our income statement part of the spreadsheet. And what you're going to see here is that all I have done is to take these figures, these list of items from over here, and I've put them here on the spreadsheet. I've grabbed the figures from this column, all these percentages for 2007 startup pizza restaurants, and I've just simply repeated them here. And now, to create my own income statement, or my own income statement, what I've done is to begin with that estimate of sales revenue that I calculated before, that $283,900 that I thought I might make in my best case scenario, and then I simply apply the percentages. So 283.9 times 42% is 119,381. And again, let's click in this cell, and then we'll go up here and we'll look at this cell as nothing more than cell E2 times cell C4. And E2 is this one, and C4 is over here. I mean, E2, I can't talk, E3. Let's go start over again. We click in this cell. We see that this cell is nothing more than the product of E3 times C4. E3, my revenue estimates. C4 is the cell right here, which is the percentage from all pizza restaurants, startup pizza restaurants, for cost of sales. So you just do the same thing all the rest of the way down. Once you have calculated your estimates of sales revenue, then you just apply each of these percentages to that number, and then you will get yourself an income statement. So we started out with revenue of $283.9. By the time we take out what it costs us to make those pizzas and sell those pizzas, or to make the pizzas at least, then we are left with $164.5. But then we have to pay out salaries and wages. We've got rent, which is the big figure in here, $20,000 after salaries. We have advertising expenses. We have insurance. We've got to pay taxes. and other SGA, other selling, general, and administrative expenses, $45,000. So that leaves us in earnings before these figures, before taxes, etc., of almost $39,000. But then these other figures have to come out. All of our expenses totaled $134,000. That leaves us then with $30,000. And we got to this figure by doing nothing more than in each one of these cells, taking the percentage from over here times our revenue, because revenue is 100%, and we took that times each one of these percentages, and then that gave us the dollar figure that's listed in each of the cells here in this column. Now, there's some useful information here. You know now how much total you're likely to pay people. You've got some idea of how much you might want to spend on advertising. If you want to match what other startups spend on pizza restaurants what other startup pizza restaurants spend on advertising. But remember, this is my best case scenario that I make this much money. I decided to take a look at this and see what it would be in a worst case scenario. And remember that one startup in 2006 in Providence, Rhode Island area? They only made $150,000? Well, if that's the case, apply these same percentages, and you'll find now that I'm only going to be able to take home $16,000. Neither of these is a great deal of money. I'm not going to be quitting my day job yet to work to take either of these through. And you also see that just as my revenue fell, then so does everything else. It doesn't take as many people to make fewer pizzas, to sell fewer pizzas, to generate less money. I maybe don't have to advertise as much, but maybe because I didn't advertise as much, it's a little less. But we can speculate like that all day long. But what I have here now to say to someone who's reading my business plan, invest with me. Here's my best case scenario. Here's my worst case scenario. And included in this is paying back interest on debt that I may have occurred in order to start the business. So there you have it.
That's all, folks.